afternoon this Thursday, October 24th. Grain trade mixed broadly today. Soybeans catching a bid with soybean meal continuing its advance to the upside. We'll get to that in a little bit. While the corn and the wheat market continue to flounder, corn did receive light sales to Mexico again this morning of over 100,000 metric tons, but not enough to stave off the technical selling from last week's big push to the 100-day moving average, which brought in an onslaught of selling that has now ran for 3 days. Let's get to work on the charts we've got to look at. First, let's start with South American weather. Here's down in Brazil. Again, we continue to see Mato Grosso here. Continues to remain dry. This is where the planting's at 60%. They should be at 67%. They're looking at a lot of replant that's going to come. We're looking out through November 1st. We are looking into the 7 to 10-day models out. Again, always dry up here. They don't bring a lot of rain in. Gaios to the east is getting some, but now Mato Grosso do Sul, they are getting rain. This is good. Their planting season is at hand, but look at this poor Rio Grande do Sul. The wheat crop there is pretty much feed wheat, inundated with rain. They have time. They don't plant until later on. Argentina over the weekend picked up rains. They have a little more rain in the forecast again here. Obviously Santa Fe a little lighter, but Cordoba and Buenos Aires pretty much looking pretty good here for upcoming rains. It's just this large Mato Grosso area still needs moisture. As we pop forward again, they always look better on the 10 to 15 day. This one is not as big as the 10 to 15 day we were seeing last week. So you can see there's a struggle up here. And you got to realize that 20% of the bean crop from Brazil comes from this area. So this is important. In the east, again, Rio Grande do Sul, just and to the north, buried in rain on the 10 to 15 day. And of course, Argentina continues to look okay as they have came through a big drought last winter. What we're trying to watch is what's going on here in Mato Grosso. Is this going to be an issue here moving forward? Because Mato Grosso produces as much beans as the largest area of Argentina tries to bring in on tonnage-wise. For the corn chart now, let's get a look at this. I am remapping this. Many I think, are going to be wrong on this look. Many thought this was a 1, a 2, and then a 3 with a mild 4, and then a push higher and a 5. That's not happening. I think what we have here is we've had this alt B to the downside. Here was your wave 1. We had an A. B went to a new low, popped. And I think we're having the same scenario that this was wave 1 to the upside. We got a 1, 2, 3, 4, 5 waves up. There's your wave 1. And I think we have an A and an alternate B popping to a new high for the ABC correction for a wave 2. Just like this B popped to a new low. So we're getting the same response. We have a wave 2 in here to finish off a wave C from this major low. And it looks like that's just going to play out back down to this 473 to 475 area because this market is just lackluster, base playing. The harvest is now going to be probably by midweek is already probably experienced up to 65, 66% complete. We were 59% as of Sunday night. So if we go back to this chart, I superimpose the waves here and we'll just play connect the dots like a bunch of 6th graders here. Once we get a low in here, probably above the 475 range because it looks like we're going to let go here. This needs to hold by a miracle tonight to turn up immediately. If not, we have to account for that break. And then we get a 1, 2, 3, 4. Here, kids look like they do this. 5 waves up. There's our wave 3, working higher into a wave 2 before the ultimate breakdown. And then we get a 4th wave pullback. And then we run 5 more waves out into the new year. Maybe a January high, February high. We're going to have a big export pace here picking up into the wintertime as it's likely we're going to be concerned about the safrinha corn crop being delayed and being exported, so we could see some China activity. So that's the new layout. This is the December 6-hour corn. I think this is how we're working the wave count. So legs have to be immediate right now, or we're going to break lower and probably challenge that 472 to 475 range before turning back up. For the soybeans, first we're going to start with soybean meal. Recall last week we discussed about how meal was in an explosive move. We said this is likely going to be the extent of how we're going to rally. So that's what this bar is here. And we said the prospects of rallying up to this 435 area was real because it also marked the 786 retracement of this high to this low. So it came in multiple ways. Plus we had this massive outside day up. Whenever soybeans do an outside day with trend, it doesn't necessarily mean we're firing again higher. It basically means it, so to speak, spent all of its energy today. And so further strength can occur up here to 445. I think we've really tapped ourselves out here. Just got to be careful that meal maybe exhausted itself today, while at the same time had blew through trend line resistance, which consolidation allowed the stops to trigger. So now soybean oil has been taking the beating on the crush as the meal has been exploding to replace Argentine unavailable supplies. Soybean oil could still make it down to just under $50 or 78% retracement near $49.75 of the low made back in June. Note that we have less soybean oil on hand, according to the last crush stocks, of smallest stocks in 9 years, which means that we have less supplies at the end of October than last year at this time when prices were trading much higher. Now, different plays came into that, but our problem right now, I think, is the world veg oil supplies are larger, even though Argentina is out. I do suspect we're going to get legs from here soon, and then, of course, as meal maybe stalls, bean oil starts our next leg up because we are going to be tight on bean oil. We get into the new year using all these plants come online, wanting to convert biodiesel. So now we can go to soybeans. Soybeans, I had been projecting that we were going to do off the summer high in ABC. The low was a little bit lower than our projected low of 1365, got to 1350. I think we've worked a wave one now up to the 40-day moving average, plus if we lay the 200-day in here, it was also crossed there. And so now we're working a wave two. And I think this 2 is going to be subdivided in A, B, C. Could be into the end of the month. We always have these end of the month lows, first of the month lows. You see it a lot. We can see a lot of these major turns occur around that window. When you always mark the first of the month, you kind of see something like this. Actually, that marked the high, I should say, is what that was. Same thing here, first of the month. Look at how that lines up. And so with that expectation, you get a bounce here another day or up maybe tomorrow, and then meal could be in trouble. And if bean oil can't turn up fast, we're going to get further correction. And I think these beans might want to press January under 13, today's lows, maybe something in that 1285, 1290 range, I think is more of the sweet spot for wave two before we start moving higher into that November 9th crop report coming up, WASDE. We'll see, get our yields possibly under or at 49 bushel. The USDA has kind of ran out of the ability to lower the exports much anymore. They've got them down so much. Plus, the crush has got to be accommodated for. The crush could likely get increased. Intraday chart on the bean oil, on the January beans. I want to bring this up. Notice today's low came in right after the breakout of the downtrend that was holding this market in place. Well, now it hit it and bounced again too. I think this is a A wave here, and we're going to do a little B wave bounce yet. Still get some kind of C wave that comes down into Fibonacci retracement that would fit more about here before we turn back higher. In cattle, this is the big one. Last week we warned, we took out 50% retracement, that a C wave. We were looking for the B to possibly go a little higher. It failed. We acknowledged it, and when it fell through the 50-day moving average, we said, look out, here comes a C wave decline, and that it occurred. So now, have we bottomed or not? We've had this 5-wave up. I said there'll be an ABC correction, and then we likely rise into expiration, which is typical for the December contract. Well, there's a couple things in play here. 200-day moving average is this blue line here, which shows up here on this chart, and got very close to that today. 176.55, I think, is the 200-day. Got down to 177.30. Volatility today. There's something else that stands out here. A 1786 retracement. It was overshot. We're likely doing it 2 times the length, which could still allow maybe for a break to 176.5, 177. But I think we're really close to what'll be a low here for at least a minor bounce, and then we probably do some congestion, and then we usually turn up after Pearl Harbor Day. My experience over 30 years is once you get to December 7th, you can't be short cattle. They will rally into the new year and the expiration of the December contract. We'll see how that plays out. One more chart. Feeder cattle. We showed this 2 weeks ago on our weekend hedger. We said trouble is going to be found at 254, and if they can't climb it, there's bigger decline coming. And in the weekend hedger this past weekend, we said possibly 235 could be hit, the mid-230s. We got there today. How did we come up with that? Well, when you look at the continuation charts, we can do measurements. We measure from here to the decline, and then add that to the top that was concluded. Down she goes. Look, it matches perfectly. We're above a prior major cycle low, and I showed you the continuation chart in the weekend hedger, and I said it sounds crazy, but these purple lines, when you get into extremes, we kissed it today. So maybe another $1 or so below today's low, but I think feeder cattle will start finding some legs in here and should start a new recovery. It might take a while. We scared a lot of people out, shook the cage pretty hard, but some recovery should start to occur in the cattle market from here, as we do expect new highs into the new calendar year, as the numbers will keep getting tighter, and it's a matter of consumer demand holds or a recession takes hold. This is Eugene Grainer with Heartland Investor Capital Management. You find this information useful.